Standard Charter has a piece out of Bitcoin. Now we'll look at why they say that, but it's worth taking a quick glance at where we sit right now. So we did just push up to 110,000, maybe about an hour or so after the Vietnam deal was announced, which is a bit of an attempt to break out of this trend that we've been in since about mid-May, which has been a slight downtrend. And last time we had this sort of downtrend in a longer time frame, we had a very glorious move upwards from about 58 to the low 60s all the way up to 102,000, which was a really impressive breakup. Almost as impressive as the break, actually more impressive, but still. Oh, you know, Symbiotic, I would like to mention, is also doing very, very well. Somebody astutely said in the comments on the live stream that this is up now over 100% since we've mentioned it. It's a robotics manufacturer. It's come under some pressure, but boy, it is absolutely kicking butt today. But anyway, looking at this Bitcoin piece, take a look at this. ETF inflows and corporate treasury buying of BTC are set to exceed the Q2 level in Q3, Q4. Let's see what they are saying here, what the details are. Potential Q3 drivers include Powell's early replacement. Okay, rather, they're talking about 245,000 as a quantity of buying, which they actually think will lead Bitcoin to rise up to $135,000 to $200,000 by the end of the year. So they're basically saying Bitcoin to 200K because of a $245,000 level, or 245,000 coin buying level per quarter being exceeded in Q3 and Q4. Potentially because of not only the early replacement of Powell, stablecoin legislation, and also we expect the market to brush off concerns about the Bitcoin halving cycle. Second half topside to show Bitcoin halving cycle is dead. We expect Bitcoin to print new all-time highs in the second half, buoyed by growing ETF corporate treasury flows. Thanks to increased investor flows, we think Bitcoin has moved beyond the previous dynamic where prices fell 18 months after a halving cycle, which would have led to price declines in September and October 25. Now, interestingly, if we had a recessionary cycle because of really bad job numbers over the next 4 jobs reports, because we get July, August, September, October between now and October 3rd, which is basically the next 4 months, right? If in those next 4 reports, we indicate some form of recessionary jobs problem, which hopefully we don't, knock on wood, there'd be an assumption that Bitcoin would also get hurt because of the risk nature associated with Bitcoin. But I think what they're saying is absent some form of recessionary dynamic, flows are such that we expect Bitcoin flows to essentially push Bitcoin to a new all-time high of 135,000 in Q3 and then 200,000 in Q4. They think prices could be choppy in late Q3. They got one hell of a crystal ball here. And in early Q4 amid concerns about this 18-month pattern. However, we expect prices to resume their uptrend, supported by continued strong ETF and Bitcoin treasury buying. We maintain our end-of-the-year forecast for 200,000. Bitcoin previously peaked between 367 and 540 days post-halving. And this is the days of post-halving where we sit now in the cycles. So they somewhat post those highs here for the 2012 cycle, 2016, 2020. And they see potentially ahead of us here that move up to 200,000. Flows are a dominant driver. Bitcoin reached a fresh all-time high of 112,000 in Q2. This was short of our projected 120, but well above the 85 level at the start of Q1. We expect strong inflows to continue. ETF net buying in Q2 was second only to that of Q4. Subtracting commodities, futures trading commission, hedge fund shorts from ETF flows to derive net quarterly inflows into ETFs, Q2 inflows were almost exactly the same as Q4, marking the strongest quarter on record. Investor rotation from gold to Bitcoin was also prevalent in Q2. Net Bitcoin ETF inflows were 12.4 billion, surpassing the 6.9 billion into gold ETFs. We do not view Bitcoin as a geopolitical hedge. So the fact that Bitcoin is outflowing, is outpacing inflows into gold ETFs is encouraging. That's actually pretty big, right? During the drama or the chaos of the Iran strikes and the nuclear crisis that we were dealing with, we saw more flows into Bitcoin than we saw into gold. Bitcoin treasuries operated by corporations that buy Bitcoin purely on their balance sheet has seen rapid growth. As we've highlighted, these corporates have become strong drivers of flows. While MicroStrategy is the dominant player, imitators have been gaining ground. That's true. Everybody wants to be like MicroStrategy right now. I mean, kind of like if you think about it, it's pretty freaking easy, right? You don't actually have to do anything as a company. Like, it's not hard to buy Bitcoin. You don't really need corporate value or corporate sales staff or, corporate administration to do it. It's pretty straightforward. It's not like you have to go remodel the Bitcoin after you buy it. Unlike the stress that's involved in real estate. That's okay. That's why there's money there for us to be made. But if you get stressed out easily, remember, folks, take it from somebody with the level 99 fishing cup. You could get yourself life insurance in as little as 5 minutes by checking out our paid partner at metkevin.com/life. All right, we estimate that we estimate that net buying by non-MicroStrategy Bitcoin treasuries was 56,000 in Q2. That's the net buying, okay? Just shy of the 69 of MicroStrategy in Q2. Wow, what? Dude, that's a lot that MicroStrategy is pumping in. Are you serious? Oh, wait, we estimate that net buying by non-MicroStrategy Bitcoin treasuries. Okay. So this is total corporate buying of 107K BTC, which would be in Q2 out of 245. Out of 245K, which means corporates equal, oh, my daughter took my calculator. I let her get away with it. It's all right, we'll use my phone. I much prefer, honestly, to use the $5 calculator. 107 divided by 245 is 44% of buying pressure in Bitcoin is corporate buying. MicroStrategy represents 69,000, of course, 69 out of 245. Oh, that's nice, which is 28.2%. Interesting. Their holdings are 5.5x larger than anyone else combined, basically, the others combined for corporate buying. So MicroStrategy is still dominant, but the buying pace is picking up of other corporates, is what they're basically saying. So MSTR still holds 5.5x the corp treasury of any other co's combined, but corporate buying now only 69 out of 107 equals MSTR. 64.5% MicroStrategy, right? So in other words, what they're saying is even though MicroStrategy holds so much, it's no longer just MicroStrategy buying as a corporate. However, MicroStrategy still makes up 28% of the buying pressure, which is basically in line with what we saw in 2024. So this buying pressure, you really have to believe that that buying pressure keeps going. If there's a macro problem, like a recession or whatever, and MicroStrategy can't buy anymore, 28% of your buying volume evaporates. That's why I think there's such a risk. Like the biggest risk to Bitcoin is not Bitcoin itself. It's Michael Saylor bubbling it up and then it crashing hard. And that's not trying to be anti-strategy or whatever. It's just basically saying you're building a debt bubble, basically, that's propping up this underlying value. It's this sort of cyclical nature of the more their stock goes up, the more Bitcoin they can buy on leverage. And the more Bitcoin they buy on leverage, the more the Bitcoin goes up and the more their stock goes up, which enables more of the cycle. That cycle will come to an end at some point. That will create a generational buying opportunity for Bitcoin. But the question is, if Bitcoin goes, I'll just say like to 500K, and then it goes down to 300K, and people are like, look, generational buying opportunity. well, okay, then 100K was still pretty cheap, right? Relatively, right? But like that potential still has to get squeezed out. So you kind of have to be prepared for that. And that's why I think watching macro is really important, especially if you end up getting macro problems between 2028 and 2033, because that's when a lot of that MicroStrategy debt comes due. You actually don't see a lot of their debt come due until the end of the decade and the turn of the decade. Turn of the decade, that sounds weird. And they forgot to capitalize this. We expect Bitcoin treasuries as a whole to buy more Bitcoin in Q3 than they did in Q2. That's actually really, that's quite bullish. Quite bullish flows. And that, you know, comparing to gold ETFs, that's bullish too. U.S. policy and regulatory developments may also drive Bitcoin price gains in Q3. Recent indicators for President Trump will be that he will name a replacement for Powell in October. One such driver that could lead markets to price in more Fed rate cuts sooner. I think there's also a risk to assuming that that rate cuts automatically equal more buying. I usually like helicopter money, you know, when they're printing money. Although they say rising U.S. term premium Treasury term premium is correlated with Bitcoin prices. Yeah, term premium, okay, we get one step removed here. Regulatory front, we got the Genius Act. 13F filings are likely to show a further broadening of sovereign buying. So that would be country buying. That's impressive. This is a good graphical representation of corporate treasuries over the last 90 days, showing more others versus just MicroStrategy. So it's no longer just Michael Saylor. Other drivers. The halving cycle, they think, will be a big nothing burger. We will watch for selling by long term to determine if this is indeed the case. Long-term holders sold, when we reached a peak in early 2021, long-term holders sold 600,000 Bitcoin a month. For comparison, maximum so far in this cycle have been 400,000 Bitcoin and 200,000 Bitcoin in 2025, January. So in other words, you're seeing less of that long-term selling. I mean, yeah, absent macro risk, this is actually a really bullish Standard Chartered piece, suggesting that these flows by corporates are just widening. You've got regulatory bullishness. You wonder, though, how much of that is already priced in. But long-term holders or hodlers are selling less than ever before. So far, really, if you overcome the halving cycle fears, they don't really see a negative caddy here. Although they do think at the end of Q3 you could get some choppiness, which just conveniently sort of aligns with the sort of unemployment catalyst. Like, will the next 4, it's not about tomorrow's unemployment report or the next 1, it's about the average of the next 3 to 4 employment reports. 3 for the Fed rate decision in September, and then 4 for you know, where my head is. But anyway, this, honestly, you can't look at that and say that is not bullish information for Bitcoin. Impressive.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.